This takes 4 hours per day, but it will make you $5,278 per month. Now listen up. If you have 4 hours a day to doom scroll, to watch Netflix, and binge eat, and think about it. Are you spending 4 hours a day doing these things? I think you probably are, let's be honest. Then you definitely have 10 to 15 minutes to learn how you can make $5,000 per month. But look guys, if you don't like money, do me a favor, click off this video. It's not for you. Okay, if you're still here, you must like money like me. Now, only that serious people are watching this. Let's get into it. I want to show you how I went from a broke construction worker with 250 grand in debt to becoming a multi-millionaire trader that has time, location, and financial freedom. Look guys, if you haven't seen success yet, it really doesn't have anything to do with you, because everything you see online, complicated business models, simply not beginner friendly. Dropshipping, there's secrets to that industry that you guys probably don't even know, or maybe you do know. So basically what they do is the top products, they're already given to people before they hit those websites. So there's no testing of these random products. In fact, if you're a big dog, you're going to get the product that's going to perform, and then they're going to let you run that. And after it's ran out, then they can put it on their website, and then everyone else gets a second chance at kind of doing that. But this is a kind of thing. It's all about connections and everything like that. Whereas with trading, it's all about you and the markets. So you've definitely been misled in life. But guys, let me show you the exact trading strategy that's gotten me to where I am, so that you can do it too. And we don't use 10 indicators. We don't do emotional trading, revenge trading, any bad trading habits. We don't go for small gains in terms of dollars. We don't trade anything that lacks context, and we don't follow retail traps. We use them to our advantage. What we do is we have clear entry criteria. We have context-driven strategy, which avoids false signals, actually takes advantage of false signals, uses institutional logic, and forces discipline and patience. So step one is we want to start with the bigger picture. Find where the big money liquidity is on the higher time frames, which could be the weekly and the daily time frames. So for example, price makes a high on the weekly, a higher low, and a higher high. Find where the liquidity is. Now, we obviously have a ton of liquidity above the highs and lows of the trading range. What people fail to really look at is that you also have demand zone here. You also have a support level across here. So where's the big liquidity sitting? It was a lot of liquidity at this high, and then we took that right there. So what happens if prices, especially coming down into these regions there, where is the big liquidity sitting? Under here. It's under the range with the low, under the support level, and under the demand zone. So that's a very important thing. Next thing we want to do, move down to the medium time frame. So let's go with this example right here, and let's scale it down. So now we're going on the 4 hour. We can see we had some structure coming up, and again, I'm just drawing this leg right here. We had some structure coming up. We have our supply zone. We can see that price comes in. On the 4 hour and the 1 hour, let's say we have a bullish break of structure, which creates a new demand and potentially an area where we have trendline liquidity building up to the downside. So again, where is the liquidity sitting? Is it at the high? No. Where is it? It's right where price is. That's also a 61.8 retracement in a Fibonacci range, pulling the Fibonacci tool from the low to the high. So we know that's a golden zone for buyers. Not only that, we have market structure, we have the weekly, we have the daily, we have market structure bullish, we have daily support below, we have demand zone on the daily time frame, which we identified up here. We have now a new demand zone on the 1 hour time frame as well. So now we can see there's a lot of liquidity building up, and then understanding where traders are getting trapped. So let's talk about this little push here. We have this push on the hourly. Where are traders going to get trapped? So again, we could draw the demand, and we can see once again, we have a trend line below. So we actually have a trend line which is right there. So let's say price comes into this area here, does our sufficient retracement, and does a 15-minute bullish break of structure. Now, that's happening at a demand, a higher time frame support, a trend line. So now we are understanding that that's going to create a new area for price to come and retest, where buyers are going to be just so excited to take that trade. Every time frame's bullish, we're going higher, this is going to be such an easy trade. But I'll tell you what usually happens and how we can actually take advantage of that. The first thing that we want to do is drop down to the lower time frames. Now we've already identified our 15-minute push, which is this. Now we know how much liquidity we have below. So now let's say we have a demand zone here. Now we're going to find our entry. So entry can be on the 5-minute, it could be on the 1-minute. But again, we're going to be looking for the liquidity to be taken. So if price is coming down nice and clean on the 1-minute, looking something like this, and then let's say we actually have a little bit of a higher push there, and then a boom, bullish breaker structure. So what that's done is it's taken out the low. It's actually swept these equal highs, which is a minor support zone. Now what we can do then is we can do one of two things. We can enter on price coming up and pulling back, or we can enter off a reaction off of this 1-minute supply, or like a break and retest of the support level. So entry criteria can be either of those, but what we're actually looking to do, let's say we enter off this break, stop loss will be above, target will be the supply, is take out all that liquidity that we just saw. Now that is step 5, so I really drew the trade criteria there as a continuation. So we can see that we've entered based on the support level being taken out, the 1-minute bullish break, and price just melted through that. So that's the trap where we know everything is bullish, everyone's going long right now. Fibonacci traders, market structure traders, SMC traders, trendline traders, everyone's going long. Even on the 15-minute, you might even have a little minor trend line like this, which even confirms an entry off this supply to take price down as a second entry model. Find the liquidity, where the liquidity is. If we're open a chart up and we're not even looking at structure, we're just marking out supply and demand, support and resistance, trend lines, equal highs, equal lows, Fibonacci zones. We can see, all right, there's a few zones below, but there's a lot above. And that means the liquidity is above. We can get a manipulation of sellers in the market. We can actually take that trade into that liquidity every single time and profit from the markets. So obviously we want to manage the trade, target clean levels and use simple risk to reward. So basically the entry criteria is that 1-minute break, took out support, sell, stop loss above, target is a 1 to 2 for me. When price then makes another low, that's when we go break even on that trade. So now we can't lose money. Our entry was here, we move our stop loss to here. Then price might, do whatever it wants to do. Of course, it's a random trade. Looking for that 1 to 2, and we close. Beautiful. So to break it down for you, let's have a look at a quick checklist. So again, higher time frame bias. Where is the big liquidity sitting? The weekly or the daily? Find it. Intraday bias. What is price doing on the 4-hour and the 1-hour? So in this case, we had the weekly was bullish, the daily was bullish, support zone below, and big demand zone on the daily. What is price doing on the 1-hour? Well, it's actually on a bullish breaker structure. So again, it's great. It's showing that every buyer is jumping into the market. Then we want to detect the trap. The trap is those little 1-minute pushes or those Fibonacci zones, which leaves a big wick to the downside, which what we saw was the 1-minute push, which took out a support level. That is a trap. It's taking out a bit of liquidity and it's going to take everyone out that's being manipulated into a buy, especially at that 1-minute demand zone. Then we want to wait for our entry. So again, a liquidity sweep, which is what we saw, which was our entry model combined with the bullish breaker structure. The risk management is placing the stop beyond the liquidity zone, which we did. And then of course, making sure that we're protected and that we're moving our stop loss if we need to, if we get into enough profit, to make sure that a winner doesn't become a losing trade. And then we want to target a clean liquidity pool, which was our next higher low. For me, you're targeting liquidity pools as well. But that liquidity pool, if a 1 to 2 comes before that, I will close my trade. But that's essentially what we're targeting for the trade itself. But guys, that's it from me. Quick video just breaking down the strategy and how we're actually doing this on a higher time frame bias and how we're actually getting into our clean entries on a lower time frame. If you enjoyed this, make sure you like, comment, and subscribe. And there's much more coming for you guys. Thank you.